So, how many of you guys have kids? You're all kids yourselves, yeah. So the Wrigley Field thing probably means most to me because I had my kids there and they're like 11 and 13. Impossible to impress. So being able to snag a foul ball with no glove made me feel really good. So the only other thing I'm gonna say before getting going is I knew this whole thing about the blue blazer dress code thing, and I swore I was gonna get up and not be mocked. So I go in my closet, I open it, and there's like 17 blue blazers there to choose from. So I chose the least blue one, and that's what I'm wearing now. That's all I got now. So I'm here to talk about payments and revenue. Who here is interested in revenue? So good, good, good. So I work for a company called Payments Canada. We are, this is going to sound really exciting, we are tasked with managing the clearing and settlement system between banks. So in some ways, think of that as the banker's bank, not quite Bank of Canada, but we manage the transfer of your payroll deposits from bank to bank, clearing checks. The second piece of our mandate is to plan and facilitate the evolution of the payment system. So as Andrew said, we're in the middle of this very large modernization journey, which includes replacing most of the clearing and settlement systems that run between the banks. And that, again, might not sound overly sexy, but it could have tremendous implications, for the access of fintechs to the payment system and the ability for Canadian businesses and consumers to be able to make payments easily, low cost, and secure. So I'm here because we are, as part of this journey for modernization, helping to educate the market a bit more on payments as an industry. People usually don't think about payments as an industry, but when you tally it all up, which is what I'm going to be talking to you about today, revenue in payments is $16.4 billion a year. So if you did measure payments as an industry, we would be somewhere between crop agriculture and telecommunications in terms of the size. And I'm hoping to just give you a bit of a flavor for where the major sources of revenue are, which may help you in the design of your businesses and finding areas to disrupt. We also I'm going to put forward, I don't know if fintech has to be disruptive. I think there's a lot of terrific financial technology run by people from Royal Bank and other places. Bankers, it may not seem like it, but they are looking to innovate. They are looking to change the way that things are done. It's just not easy inside the big machine, let me just tell you that. So if you want some insights on that, happy to share more detail. But let's talk money. So do we have, oh, I'm supposed to do this, aren't I? Sorry. Do your job. There we go, that's me. Yeah, $16.4 billion. So the first thing, if you think about this pie, is you got to decide where the borders are on the payments industry, because it does sit within the largest banks. Those are the two biggest chunks of revenue fall to financial institutions, retailers, and others that issue credit cards and process retail payments. So we got $16.4 billion of revenue. Those are the two biggest chunks. We don't include things like interest revenue for credit cards. We're only talking about the revenue directly attributed to processing payments. So I'm just going to do a little dive here into each one of these. In the interest of time, I'm only going to be able to spend a few seconds on each one. Oh, there we go. Yeah. So the first big chunk, credit cards. So $5.3 billion a year in revenue. This comes largely from Interchange, which is when you use your credit card at a retailer, the merchant fees, a good part of that merchant fee gets transferred from the merchant's bank over to the card issuing bank. That pays for your rewards, your free float for up to 50 days if you use your credit card well. So that's Interchange. Foreign exchange, a very profitable part of the credit card business, and then other fees, which think of that as your annual fee, over limit fees, and other sundry fees. So that's the credit card business. If you think about the major players in Canada, about 90-ish% of that would be the top 7 or 8 financial institutions, but retailers are also big players in this space, Canadian Tire, Loblaws, and others as credit card issuers. If you wanted to add on the lending piece of credit cards, it would add about another $8 billion to the tally for credit cards. Retail payments, I'm having issues. There we go, wrong way. All right, retail payments. So retail payments is think of this as like the core of the bank. It's made up of two big components. We've got the portion of package plans, which is attributed to payments. One of the really interesting things that we've been working on is if you trace back the origin of barter and then the emergence of currency, the need to make a payment actually existed many thousands of years before the first commercial bank existed. So you could make a really good argument, I think, that banks exist to serve payments, and really this is the numeric establishment of that. So the banks earn $6.4 billion off of package plan fees and transaction fees. So the package plan is, like I said, it's if you're paying $10.95 a month for 12 transactions, it's the calculation of that. Long story about how we got to that, but it's view it as a pretty reliable number. And then the transaction fees is the over and above fees for things like e-transfers and ATM withdrawals and the like. I'm getting better at this. Prepaid cards. So for anyone in the prepaid card space, we've got open loop and closed loop cards. So open loop, think of this as your Visa and MasterCard and sometimes Interac branded prepaid cards. Closed loop, your Starbucks card and the like. PayPal is included in here. The open loop card major sources of revenue are interchange and foreign exchange, breakage and float. I mean, this is reality within the prepaid card business. A lot of the revenue is made from the holding the float and breakage that's on the cards. And then the fees are a big part of open loop. Come on. Thought it was getting better. Loyalty. So we kind of went back and forth about whether to include loyalty in the study, but we're trying to stretch the definition of payments here. And in a lot of ways, your loyalty currency is starting to act like a source of payment. RBC, for example, offers pay with points as one of the options in how you pay your card every month. And loyalty as a currency is emerging more and more as a tradable amount. So within loyalty, we have financial rewards programs. Think of this as RBC Avion and others, Air Miles and Aeroplan. Total revenue within the loyalty sector, $1.14 billion. Acquirers and ISOs. So we've got the traditional acquirers, some of them still owned by banks, Moneris, TD Merchant Services, and others. And then some independent ones, Global Payments and Chase Payment Tech, among others, and ISOs who are generally providing a sales layer on top of acquiring services. So total revenue for this part of the industry, nearly $2 billion. Most of it made up through transaction processing, but significant chunks as well earned from account and other fees, terminals, and then a very large and growing portion earned by ISOs and gateways. And payment networks is my alma mater at Visa, as well as MasterCard, Interac, Amex, and others. So collectively as a group, those companies earn just less than $800 million in gross revenue per year. And that is largely from their issuing and acquiring base, those that issue the cards and transact with merchants. And foreign exchange always has played a bigger role in the revenue equation for payments networks. So that's a lot of numbers in a very short period of time. But I hope what it establishes overall is payments is a large and still very quickly growing industry, and that as you see the emergence of paytech as a concept, that we're looking to build bridges between the IT community and payments providers. So if any of you would like to talk to me afterwards, I'll be the guy in the blue blazer. Thanks very much.
Questions? I'll start right here. Yeah. Which of those revenue projections are most at risk from disruption and will compress the most?
That's a terrific question. So I'm going to do like a quick roundtable. I'll go back to the opening slide. I think the group that's feeling compression most right now, there's compression all through this, but the group that's feeling the most compression, I would say, are the payments processors, that they see players like Square and others going direct to market and really kind of chipping away around the edges of their model. And it's always, because it's a B2B play, it's always been a very compressed margin space. So that's one. Credit cards for different reasons. So some of this is under regulatory scrutiny too. So credit card interchange, you may know, has been negotiated down to 1.5% from about 1.6, 1.65%. And as a result, the banks have had to figure out how to make that work. So, I mean, these are profitable businesses, as this number would suggest, but certainly the scaling back on costs, there's been a lot of pressure on that within credit cards. Loyalty, a little bit. The loyalty providers are kind of caught between buy and sell and their loyalty currencies. You've seen AMIA just recently have some real trouble with the Aeroplan program. You're kind of beholden to the clients that you got. So everyone feels compression. I have heard consultants stand up on stage and say, get ready to go to zero because the cost of payments are going to go to zero. I'm not a big believer in that personally. I think there is a lot of opportunity for improving cost structure, but ultimately, I mean, payments is work, and work adds value where it does, and value generates revenue. So that's my answer.
Hi, very good presentation. Where do you see the best opportunities for startups within the payments?
Great question again. So where we've seen the most influence, I think, among startups is within prepaid. So this is kind of a payments version, not digital banking, so I'll focus on the pure payments piece of it. So prepaid has proven to be like a quite convenient product, I think, for fintechs to offer as a way to begin to engage a consumer on a lighter regulatory basis than you would have to get into relative to a deposit account or something, in particular deposit account. And when working through partners like People's Trust or Citizens Bank, that you're able to do that and turn the key on a serious financial product with a minimum of effort. So I think if you can find ways to package products that include a prepaid card product, and we heard that a little bit from TransferWise earlier, that is one of the easiest ways in. I think credit cards, as much as you think about the big programs, there are opportunities for co-brands if you have an established, large, loyal customer base. Banks looking to innovate, one of the ways that they can innovate is by partnering to issue a credit card. Lots of investment and innovation in payments processing. So what is labeled here as the connection layer. Not so much the payment networks themselves, although certainly there are those trying to take on the payment networks, but I think the actual processing of payments in different merchant locations has seen a huge amount of investment with players like Touch Bistro and offering vertical solutions that appeal to a particular merchant segment and then taking the payment processing upstream. So lots of different strategies depending on what your business is looking at.
We got a question over here.
What is the biggest thing to have happened to payments in the last 5 years, in your opinion?
Wow, yeah. I'm gonna cheat a little bit. I'm gonna say it's the thing that hasn't really happened yet, which is using your mobile device to be able to make payments. Because so I was at Visa in 2008 when the first mobile payment was made between with CIBC using a Visa card on a cell phone at a merchant terminal. And it's now 10 years later, and we're still at like 1 to 2% of transactions using mobile payments. But I still think there's a lot that's happening there. Apple Pay's introduced, Android Pay and now Google Pay and Samsung Pay are getting traction. The banks continue to play in the mobile payment space, and it really has the opportunity to change everything. You know, your ability to interact with your account, do more things, pay in more places, shop at the merchants within your phone, buy insurance. There's just a huge amount of opportunity still to come on mobile payments. Thanks.